Good morning. It's nearly 9:30 on Thursday. Heading towards the end of the month. We've just had the FOMC meeting come out last night. As I thought, well, I've been talking about higher inflation anyway, and the need for higher interest rates, and that seems to be becoming more of the case as far as the FOMC are concerned. Powell, probably the most hawkish he's ever been, talking about rate rise in March, which was as expected. Didn't really give an indication of how much, but certainly is indicating that there will be more rate rises to follow. Even back-to-back rate rises could be seen. Still a bit of a wait-and-see approach, which I suppose is fair enough because nobody knows what will happen in the future. If something were to change dramatically over the next 2 months, then they might revise that down. I don't see that happening. I've never really been in a situation where I've visibly seen signs of inflation. I'm 53 years old, and in all that time, I've never experienced it. But energy prices just keep going up. Oil, which you can see I've got on my chart now, that keeps going up. So petrol prices are going to keep going up. I'm even hearing stories from friends who are going to restaurants. They have a favorite restaurant, noticing the portions are smaller. Packets of whatever they buy in the supermarket, there's it's slightly a smaller amount than it used to be. It seems like the prices may not be going up so much, but what you're getting for your money is certainly a lot less. And that just seems to be a theme. And inflation, from my opinion, is really getting very, very ingrained in the whole system. Wages are going up. People seem to have money. I don't know what you're seeing, but in England, we're kind of coming out the other side of the pandemic now, and it seems like people have just had enough of it. People are still catching COVID. I know people that have got it, but it seems to be pretty mild these days. And they're just going out. Restaurants are full during the week. So people seem to be just ready to restart their lives and start enjoying themselves. People have money in the bank they haven't been able to spend for 2 years. So this is why I think this could be the beginning of an inflationary period, not necessarily the end of it. People are going to go out and spend money. And with supply chain issues, I'm really worried about it. I think this really could just be the start of a very, very sustained high inflationary period. Anyway, I seem to be alone in that thought, although so far I haven't been wrong. As far as predicting higher inflation, even higher than I had expected. Okay, enough of that. I talked about that yesterday. Let's actually start looking at some of these markets. I'm going to run through quite a few markets today. So if you're trading Forex, if you're trading oil, gold, or the stock market, stick with me. I really want to try and give you a broad outlook for everything. And also, obviously, please do like, share, and subscribe. But also in the commentary box, if I haven't covered a market that you want me to cover, let me know, because I'm not that busy today. I'll read the comments and I could throw up a video on whatever market you're looking at a little bit later in the day for you. Make sure you subscribe so you get the notification that I have published a new video. Right, oil. So actually, let me start by showing you the actual. We're trading the March contract. Now, this is the March contract alone. And as you can see, March has been going up steadily. As I zoom in, we've had a real good run up from the end of November. Punctuated. This is just a typical bull market. So you go up. This is quite normal at the early stages of a new bull move. You get quite a big dip where you're not quite sure if this is going to be a bull move, and then you start to accelerate to the upside. You're always going to get bull flags, which is what we're seeing here. Bull flag, bull flag, bull flag, bull flag. That's perfectly normal because bull markets don't just go up every single day in a straight line. They will pause for what and consolidate. I always call it consolidation when the market dips slightly in a flag or some sort of consolidation pattern, triangle, pennant, whatever it is. So that's normal. We had quite a big bull flag here. Now, I didn't suggest getting short because there was no sell signal. It was just some dojis, and this is a hammer, indicating that maybe the market needs to pause because we got so overbought. But hey, it didn't pause for long, did it? We didn't really pull back much. In fact, if you can see through, you can see down here where I am, you can see the slow stochastic has been overbought for such a long time. And that is perfectly normal in a bull market. These guys who see in a bull market, who see the slow stochastic or the RSI or whatever oscillator you have at the bottom of your screen, they see it go overbought. They think, wow, this is overbought. That means it must come down. Forget about it. If you're in a bull market, do not try to sell just because the market looks overbought. Anyway, pushed higher now. We've had 2 good days of moves higher in oil, and we beat the previous high, which was for the March contract, which was at 87.10, and we've been up to 87.95. Now, the reason I showed you the March contract alone is because when you look at the continuation contract, which goes a lot which goes all the way back and has all the months. You see that potential double top here. Now, the reason why I wouldn't be saying, hey, this is a double top, we need to be careful. Oil is extremely highly priced, very overbought. We could be going down. I would need to see a negative candle here. Even these candles are not particularly negative. They're only dojis, indicating that the market might have been running out of steam, and it was, because it came down for a couple of days. Now, on the continuation contract, we're still looking quite strong, big blue candle, but we couldn't break the previous high. 87.90 area, 87.95 is some sort of resistance, obviously, because we couldn't get through it yesterday. But if we'd have tested that and then sold right off and seen some aggressive selling, then I might be more concerned about a double top. But we're not seeing that. We've seen a big blue candle. Yes, we're having a pause. So I still think it's too risky to be selling into such a strong bull trend in oil. So, buying onto dips seems the way to go. Buying a break above resistance, which is a normal procedure in a bull market, seems to be the way to go. I don't have time to give you all my trading levels in these videos. I'm just giving you a broad outline. Obviously, if you do want the trading levels, the signals and the trade ideas, just go to my website, which is daytradeideas.co.uk, and you can subscribe there, and you'll get all the trade ideas and signals every morning. Gold has been a good market. Difficult to read. As you know, I've talked about gold lately, and it usually is one of my favorite markets. But look, this chart is a mess. Up and down, all over the place. No clear trend whatsoever. We are obviously going sideways. Even on the daily chart, we've got moving averages all converging. The 50, the 100, the 200, even the 500-day moving average, all converging very, very close to each other around 1805, 1800. Moving sideways, flatlining, just showing that really a huge consolidation in gold where it just simply isn't going anywhere. And you can see that just from my trend line. So this trend line, the upper trend line, that was the key resistance for me this week. I didn't even know if we'd managed to get there because the market was so directionless. I wasn't sure we'd even managed to test the upper trend line, but we did. Now, if you're a subscriber and you're following my live signals, then you'll know that we jumped into a short position there. Maybe you jumped into a short position as well if you're just following me on my free videos on YouTube. And what a beauty that was. The market really did sell off. My first target was around 1835, 1830, and I actually took some profit there on my short position because I didn't want to have a big position over the FOMC. I was already short the stock market, so I didn't want to have a short gold position as well. I figured that they could both go against me. So I was fine with that. But the market has tumbled a lot further, and we do have some support down sort of around 1805, 1800, as I said. If that doesn't hold, then gold could be in for quite a big move to the downside. But as you can see, the trend lines are working, the trades are working. We'll see what happens around the support area with all the moving averages. Aussie dollar has been one of the easier markets to read, put it that way. So as we zoom in here, where are we? I can show you that clearly we're in a bear trend. We've been in a bear trend for 9 months, shall we say. So that's fine. Bit of a bounce to the 100-day moving average. We were shorting up there. That worked fine. We came down to this trend line, which I thought might hold, but it didn't. It broke. That was the sell signal. But this has been actually fairly easy to trade. And most of the Forex markets are not that easy to trade at the moment because they're really quite directionless. Broke down, retested the trend line and the 50-day moving average. Nice and easy, jump into a short position and down we go. And I think this could be quite a sustained move to the downside. So if you're not a subscriber, actually you would not be aware of this because I've not talked about this trade. But if you are a subscriber, then hopefully you've managed to jump into a short position there because I did put it on the trade sheet, and maybe you've taken some money out of it. We already hit most of my targets, or I think all the targets, but I think that the outlook remains quite negative. Down here where I am, you can see, in fact, why don't I move myself over here? That would be a better idea. Down here, you can see that the slow stochastic, which is the oscillator that I use, is not even hit oversold territory yet. We're just about to enter it. So I think there are further moves to the downside, bearing in mind the dominant trend is probably quite negative. We've certainly, on the daily chart, trading below all the moving averages, which adds pressure to me. The moving averages are certainly pointing down. I'm looking at the 4-hour chart, which you can't see, but it's also on my screen. That looks quite negative. The price is trading below all the moving averages on there as well. So there you go. I think Aussie dollar goes lower. It wouldn't be, dollar strength wouldn't be a complete surprise, would it? With clearly signals that interest rates are going to go up in the States. Okay, so New Zealand dollar, that broke. We had our trend line and our support around here. There we go. Once that broke, down we go, jump into a short position. That's really nice. We also had something of a, well, not necessarily a support level, but we were looking to sell on a break below that kind of area, which had been support before. That was nice and easy. We broke, we returned to the sell level, very, very kind of the Forex pair to do that, and then bang, down we go again. So that was a nice trade, looking at up to 100 pips profit on that one. And again, I think this will continue to go lower, the New Zealand dollar. Let me scrunch it up a bit. I think we've got potential to go down fairly significantly. What I could do here, try and give you an idea just from some Fibonacci levels. There we go. Let's do that. That's where I put my fibs, and then I'll open this up again. You know, the 50% fib is all the way down here at around 64, just above 64.5. That could be where we're going. It's 150 pips away. Not that far, and I think it's a reasonable target. Not in a straight line, obviously, but I think over maybe the next week or two, we could get down there. Japanese yen is worth a look. Dollar yen. So we're seeing some dollar strength as we know, probably triggered by Powell and his talk of high interest rates in the US, giving the dollar a bit of a lift. Now, this is where I need to redraw this trend line here. Actually, yeah, strictly speaking, I'm going to do it there because although the trend line before was quite accurate because it caught, look, I'm going to show you, it caught all these lows. So that was really accurate. This spike down took us to here, but this trend line is more accurate because it captures this low, this low, this low, and this low. 4 days of lows it actually captures. But the reason I'm going to take it off is because I think something else is developing now. And I'm wondering if we are building a head and shoulders pattern. Of course, I don't know, but I wonder if this could be the left shoulder here, and then this is the head. And are we building a right shoulder? And if we are, this will be the neckline to the head and shoulders. And that's why I've redrawn the trend line. And that is going to coincide quite nicely with the blue 100-day moving average. It looks like the blue 100-day moving average can catch that because obviously it's at a slightly raised incline compared to the trend line. So something to watch. I don't have any clear trading levels in the dollar yen at the moment, but something to watch. Is that pattern going to develop? And if it does, and if it breaks sort of below 1350, then we've got the completion of the head and shoulders pattern, and that would be a sell signal. And I'm wondering, because I'm quite negative on stocks, and I'm wondering if eventually the yen will become a safe haven if stocks do continue to go down, as I think they probably will. I said the Forex markets have been difficult to trade. That's really compared to the stock markets, which I've found a lot easier to trade. But there have been some patterns that have worked. So this was really tricky, the euro, and I must admit, when we broke higher, I thought that was it. We were going to have a good old run in the euro versus the US dollar, but that wasn't to be the case. We came back, we tested the trend line. Now we broke the trend line, and then we returned to the trend line in the 50-day moving average for a sell opportunity. That worked really nice. I didn't actually do that trade, but I know some of my subscribers managed to get in on that one, and that's looking pretty good. We are now, well, certainly 100 pips lower, so 100 pip on that trade is nice over a 2-day period. Move on to the stock markets. My favorite one really is the S&P. That's the one I've been trading. I seem to just get on well with that one. So pretty easy. The levels are working. I didn't know that we would bounce up to this resistance level, but I certainly had that as my resistance level. And I know I've talked about that on YouTube this week around the 44.40, 44.50 area. That was my sell opportunity. And maybe 44.30, 40.30. 44.30, 44.40, because that's where the 200-day moving average is. That's where I've got this confluence of Fibonacci resistance as well. And look at that. We rocketed up. We hit, what was the high? 44.46, bang in the middle, pretty much, or of that, bang on the sell level anyway. So I know some of you were shorting there. Well done. Really nice. I was actually already too short, so I didn't bother to short there again, but I was happy to see that level rejected. Obviously the market's plummeted. We came down to 42.63. It's almost 200 points away from that level, almost bouncing back again. But I just think this is a developing bear trend in the S&P, so I'm happy to remain into a short position. You can see we've got a little bit of resistance around 43.50, 43.60. We're trading around there now, so we'll see if that holds and the market continues. But I'm just not seeing, the kind of thing that I would be looking for if this was a buy the dip market. Still, I'm just not seeing it. And I've always been a buy the dip guy because I'm a trend follower, but I just think the trend's changing now. And I think the fact that we've got such extreme volatility is also an indication of the fact that the market probably is topping out and will start to do a bear trend. We're seeing the moving averages starting to turn lower. Maybe end of next week, we might even get a moving average crossover. We might see the 50 cross below the 100-day moving average, unless we see an enormous rally, of course. and that would be a further negative signal. So I'm really concerned more about moves to the downside in the stock markets. Nasdaq's getting even closer to moving average crossovers. We're well below the 200-day moving average. We haven't even managed to get anywhere near that on the bounce. We're not really managing to get through this big confluence of Fibonacci levels resistance there. We managed a little spike up above it, but couldn't hold it. If anything, the Nasdaq looks more negative to me. But have a quick look at the Dow Jones. This seems to be holding up a little bit better, but look at all this indecision. We are closing near the open. We're testing up, we're testing down, we're closing near the open. So clearly there's quite a lot of indecision here. But as long as we hold below this trend line, I think that looks quite negative to me. Quick look at the DAX. I know it's been asked for this week. I just haven't had a chance to look at it. DAX is holding these sort of trend lines here. Question is how long. We're holding below the moving averages again on the daily chart, the 200, the 100, the 50. They look like they might start to cross over too. So I still think there's a negative bias here, despite the fact we had a big blue candle yesterday in the DAX. So I feel that, well, let's see if we break below 15,000. Clearly that has been a good support level with the trend line that I've got on here. And 14,800 area, also a good support level, which certainly is marking around the low of this week. Those would be the levels that if we break, we're going to see some significant moves to the downside. Okay, I hope all that's helpful. Now, as I said, if you want the trading levels for today, go to daytradeideas.co.uk and you can subscribe to them. You'll get all the levels every morning. And if you would like me to cover something else on today and do another video for you, just put it in the commentary box. I'll keep an eye out and I'll see if I can find some time to help you with that too. And obviously, please do like, share, subscribe. Help me out with that, and I'll keep churning out these videos for you. Any suggestions on how I can help you, with my presentation, with what I'm talking about, education-wise? Just I really do appreciate any comments and any feedback.